Hi, everyone, and welcome to this week's segment of Mish's Market Minute. I am your host, Mish Schneider. And as I always start out by saying, we have a tremendous amount of material to cover, and that's because there's just so much going on. So I'm calling this one Planes, Trains, and Automobiles because we're really going to focus on the transportation sector and show you why it's so interesting that this, after years and years of not having any leadership, in fact lagging, has all of a sudden now taken a leadership role through the look of the phases, and that actually supplants the typical leader that we've had pretty much since 2012, which has been the semiconductors. But first I want to take a look at the macro, because right now in the current situation with about 6 weeks to the election, news all over the place, a very sensitive market, huge amount of selling that we've had recently in the junk bonds, the market basically in caution phases through the indices, et cetera, et cetera. I think it's important that you really understand before you make any moves that what you're up against in terms of that macro. And then since last week we covered BioTech, I'm just going to cover the three vaccine-related stocks to see where they are at. And then that's when we're going to go into a really in-depth look into the transportation sector with actionable information, of course. So here's essentially how I'm going to look at the transportation. Obviously, we're going to look at the ETF first. Then we're going to go through the different aspects of the ETF IYT, which is ground freight and logistics, air freight and logistics, airlines, marine transport, and passenger transport, which includes ground and sea. These are all, by the way, some of which are very well set up, some of which are already extended, and some of which look really like they need to sell off first. Okay, so what I'm going to do here is switch screens. And here we are now at our first chart, so let's begin with the Qs. Now, last week when I spoke to you, we were still above the 50-day moving average, and so now you can see we're below the 50-day moving average. But I had also mentioned that the measured move from the high to the reversal pattern was about 260, and guess what? It hit 260 on the nose earlier in the week, and then 260 again, or close to 260 again on Thursday morning. So that means now if 260 breaks, most likely we're going to head a lot lower. I would say maybe we look at a nice stop first at 250, but really ultimately I wouldn't be surprised to see some kind of test here to the 200-day moving average. It is underperforming the SPY and NASDAQ, which is interesting, and if you look at the real motion, it is sitting on the 200-day moving average, but this is far in price from there. So if this is any kind of foreshadowing, it looks like we could head down there, and especially if this starts to break down under the 200. If we move over to IWM, this is actually having a little bit more different type of struggle, because not only did this break down under the 50, but it also, this week touched the 200. Early on Thursday, broke the 200, and looks like it wants to really close right around the 200, which means that if we can get any kind of good news in the market Friday, and this can get back up around 144, 145, maybe the worst is over. Certainly when we really dissect the transportation sector, you'll see why that's so important. Mainly because they're both in the economic modern family, which we're going to get to. Still grossly underperforming the SPY. And you can see that this too actually is doing a little better in momentum than in the price, because it's still holding above that 200, which is why this is so pivotal right now. Now, if we move to the SPY, that too is under the 50-day moving average in a caution phase. I had mentioned 322 is a key area to hold. Basically, it went down to 320 on Thursday and is back before the close on Thursday at around 322. So let's call that 320, 322 area pivotal. If it holds, great. Then we have to see this thing get right back up, at least to get through like 325, 327, ideally 330. And if it breaks down, then we're looking at maybe a move down to around 310. And again, close to the 200-day moving average on the real motion, pretty far in the price. So that's also very interesting to me. And then finally, just to round it out, we're looking at the diamonds. And the diamonds here also look very similar to the SPY in that they made their measure move down, good support at the 200 at 260 that has to hold, and if it can clear back 270, all the better. Also, above the 200 here on the real motion. So we're not really seeing any major divergence in that one either. Now, if we move on to the modern family, it's extremely important to keep an eye on them, and that's why we're going to look at the transportation. Retail, which was really one of the strong leaders and that's holding pretty well now, is now getting a confirmed caution phase. However, holding around these levels here at 47, 48. On a weekly chart, this broke out over 45. So that means that this could go down to 45 and still be in a long-term trend on the weekly chart. But what makes this so curious to me is that you'll see when we really dive into transportation, that this has got to be a part of it, because a huge part of what happens through the transports, whether it be ground or air, is actually goods. And so the consumer, being a consumer-driven economy, is really super important to see whether or not they just totally give it up and go totally negative on the market, or they're really taking this money that they may have and waiting for in the future, or those who've gone back to work, or they're unemployed in checks, or what have you, as long as it still holds out, they're still spending. The reason why we're seeing this mix is because of the fact that this particular ETF has brick and mortar retail and online shopping as well. Now, if we move on from XRT and we go over to IBB, this is exactly what we covered a week ago. And we said it was showing relative strength. Well, now obviously you can see what difference a week makes. It's failed its 200-day moving average. But again, if we looked at a weekly chart, we would see that this is actually holding between 126 and 129 is really where it had its longer term breakout. And of course, if the market turns around, that would be, besides obviously NASDAQ, this would be another place I would continue to look at, as well as transportation, as we're about to see, and even the retail sector. And then from there, if we go into semiconductors, this is why I'm showing you now how this has lost its leadership. This is underneath the 50-day moving average, but holding a lot of support here at around 163. So if we take 163 as our area to break, we're going lower. If we hold 163 and we can get back through 170, that would be actually amazing. And yet it's still well outperforming the SPY. And again, sitting on the 200 on real motion with the price being really far away. So it's interesting. The momentum is actually kind of holding up here in the face of everything. If we take a look at KRE, well, this has basically been telling us the story all along. This has never caught up to the rest of the market. This is the banking, regional banks in this case, but the big banks, we can pretty much say the same thing. And of course, this is really reflecting the loan delinquency situation, the bankruptcy situation, and the fact that, banking is just not robust right now. But we do have this low right down here from when we got to 32.50 back in July, and we kind of got close to it on Thursday. And what's interesting about this is if this is going to make any kind of turnaround, which doesn't look like it's happening anytime soon, but if it does, it is holding the low that we had on Wednesday after having a massive sell-off. Could be just a little bit of short covering, but maybe the start of something else. You always have to keep open-minded when it comes to this thing, these trades. It's just like coming into Thursday where everybody was doom and gloom. The market actually turned around for a while and went green. The market is really on pause right here, waiting desperately for some sign for the government to come up with some stimulus money. And that would help this sector as well, of course. So the other pattern I like to look at is a new 60-plus day low, which certainly this is, because that was more than 60 days ago. And then a close the next day, which would be Friday, over the high of that particular day. So that would be, let's call it 35 would be a good place for this to close. That could be interesting, but we're certainly not seeing it in the real motion, which is still very, very weak. So now let's move on to IYT, because that's going to be our topic today. What do you notice that's different about IYT? It's not the prettiest chart I've ever seen, but it is the only one of all the indices we just covered and all the sectors in the economic modern family that we just covered that is in a bullish phase. In fact, when I look at all of the sectors I like to watch, which would include utilities, consumer staples, real estate, all of them, except for home builders and this, are all in weaker phases. So home builders and transportation are taking the lead here. Can they hold up? Well, that's of course going to be the big question. So right now we're looking right here at around 193, 194 with the 50-day moving average at 190. So this could take a little trip down to 190, even break it and close on it and still be a good sign. Where would I get like extremely bearish? That would probably be if this finally gives it up and takes a phase change to the caution under 190. On the flip side, though, I wouldn't get too involved right here, smack dab in the middle between the support and the resistance. But if it can get back over, let's say, the 10-day moving average, which is what this pink line is, 250, now we have ourselves a new ball game. And I cannot get too negative while IYT is in a bullish phase. This has been a lagger, like I said, for years. So let's keep a really big eye on this. And you can see in real motion, the momentum has come down, but it's still holding firm here. It hasn't broken down under the 50. And of course, look how well it's been outperforming the SPY at this particular point. So when I looked into the actual macro here, since we've talked so much about junk bonds, I wanted to actually show you this because I have talked about this not just here, but I've been on the news talking about it. This is HYG. There has been a massive amount of selling, and this has been really where BlackRock was buying to show its support through the Fed. And then once this started to give it up, and we talked about this last week, that once it broke the 50, caution was going to be, we looked at junk, this is pretty much the same thing. Caution was going to be the name of the game, and that certainly turned out to be right. And I even gave you a few shorts to look at in terms of the BioTech, so you should probably review that and see which ones might be a really good short if the market continues lower. But my bigger point is that we're getting a confirmed distribution phase, and even though this has popped back from the low, if junk continues to go lower, then that would tell me also that this whole market really has got some deep issues here, because the Fed has already said several times, we've done pretty much everything we can do, and it's really up to the government now to take over. And of course, we're into political footballs right now. We don't know if that's going to happen or not, if it's a priority or not. I like to think it will be, but if it doesn't happen soon, then maybe not. So this will also be a big key before you load up long on anything. And of course, the real motion indicator is showing the weakness here too, but still a divergence because it's above the 200. So that's really the only outlier I wanted to show you, besides one other, because we talk a lot about commodities. We're not going to talk about it today, but I do want to show you the dollar. And that is right now, the dollar had this nice little massive rally after making a new low. Remember that 60-day low and pop? Just like I showed you on the flip side with the Qs, this was a new 60-plus day low and a pop with a good close. So I'm not surprised to see this up here. But I like to watch actually DXY, and 94.25 in DXY is going to be an area to watch. In this case, I would say this would be under the low right here, probably under like 25.30 would be a place where I would start to think some caution should be advised in the dollar. And if that's the case, the massive liquidation even that we saw in the metals could also stop. But again, I wouldn't even be looking at the metals at this point because everything kind of went down together. All right, let's move now into IYT. Now, what's interesting about IYT, it's the demand side. As I mentioned, it's consumer related, obviously. Every single one of the 22 stocks in the basket of IYT are all United States stocks. And the one part that is the heaviest weighted in terms of what's in the IYT is actually ground freight and what they call logistics. That's 55.46%. So what I thought we would do is we would look at the top 6 holdings of the transportation sector, which will cover a lot of that ground stocks. And then since they're not in the top holdings, but they're part of the basket, I also want to look at airline and cruise line stocks, and also take a look at, interestingly enough, the marine freight, which is 5.7% of the basket. I couldn't find one stock that is not an over-the-counter stock or internationally traded There was nothing in the United States because all the top marine shipping and freight companies, believe it or not, are not American. They're either Chinese or Swiss or Norwegian. So it's interesting that we have nothing to show, but I did find one stock that I will show you that does relate to shipping that we can keep an eye on and track. So let's go right now to FDX. That is FedEx. It's the heaviest weighted stock in IYT. This reported earnings and did very well. And so that's why you've seen this massive rally here, and a very orderly rally, I might add. So again, does this have more? Well, if we went back and looked at this historically, yeah, I probably could. But of course, everything is always going to feel the weight of the overall market. Things can only outperform for so long. Obviously, you know, we sink to our lowest common denominator. That's in life and that's in the market. But right now, we're holding the 10-day moving average very well. That comes in at, what, 241. So I would use that 241 as a key. And if it can get through 250, I would say that that would be very interesting. Now, why is FedEx doing so well? Because everybody's ordering online and things come through FedEx. So this is really basically just, you know, showing the demand here. And again, interests me as the new leader, because what it tells me now is that the whole metrics of the economy is changing. People have bought their technology, and even though technology is still doing okay, they're actually buying other things online as well that get shipped through this FedEx. And of course, you know, Amazon is always something else to keep an eye on, but that actually is basically flat today almost. Now, well under outperforming, and again, we've come off a little bit on momentum, but I'm not seeing any divergence. The second largest weighted one is Northern Suffolk. That doesn't look as strong. So FedEx is really ground freight, and Norfolk Southern is considered ground freight, but it's a railroad. And so railroads are going to carry other things besides consumer goods, like coal, for example, and other types of supplies. And so when I was out west, I saw a tremendous amount of freight trains going by with coal, like hundreds and hundreds of cars. So this is going to be a little bit more commodity related, but it's still in the transportation sector. So it's come off, just like everything else. 218 is really going to be your resistance, that if it gets back above, that's great. And I would look at 210, but again, as a support. But again, we want to watch to see what happens here along with IYT if this breaks down under that 50-day moving average. And in real motion, it's also come off on momentum, but still above that 50, so there's no real divergence there. Union Pacific would be another railroad to look at. It's the third weighted one. Looks very similar to what I just showed you with Norfolk. We've got the 10-day moving average at 198. We have support at 190 and then the 50 right underneath that. And again, well outperforming and no divergence in the momentum. So when we have no divergence in the momentum, basically means that the price right now is really basically showing you that it is exactly where it needs to be. There's no indication that it's too high or any indication that it's too low. And that's why it really makes sense now to be watching the price of some of these transportation stocks. Now, the next one is KSU, last railroad I'm going to show you. That looks a little bit different than the others. Now, I don't know why I didn't bother to do that research. Forgive me for that. But what I will say is that it's sitting right on the 50-day moving average in real motion, still outperforming the SPY by big means. But interesting to me, because we have the 10-day that's now acting as resistance sloping down, and we have the 50 acting as support sloping up. So if we sort of imagined an apex coming to here, almost like using the 10 and the 50 as sort of a wedge, then we could say that really if this can get through like 184, that could be very good, and you have a good risk down to the 50. But on the flip side, as the 50 starts sloping up, if it breaks down under the 50, especially with a second day confirm, that might be another sign that things aren't doing so well in that transportation as they have been right now. Now, let's go to something a little bit different. This is JB Hunt. This also, I remember when it came out with its earnings report, did very well. But look at this. This is actually now industrial trucking. So this is why IWM is down. Supply for consumers and demand in transports for consumers is good. Manufacturing, not so much. Industrial demand, not so much. So you could see how divided the economy is, and you got to look at each sector, for its own merit. And so this broke down under the 50. Once again, look how nice that 10 is almost acting like a trend line here. So maybe through 132, you could use all these lows right here as a support level. It looks to me like if I blow this up just a little bit, we're talking about basically at around 128. It would always be good for you to look at these exact numbers since I don't have them on the chart. But let's figure over 132. That means maybe we would take another trip up to the still positive sloping 50. But again, if we break down under here, we have a pretty big topping type pattern here, and we could see this swoon down to 120, even 115 very quickly. And again, no divergence here on the real motion. So let's now move a little bit to the airlines. Let's go to LUV. I want to make sure I leave time to show you the 3 vaccine stocks before we end, but this was, to me, was far more important right now. Now, I picked Southwest Airlines of the airlines for a reason. I get pretty much inundated with offers, and I'm sure most of you do too, for really cheap flights from Southwest Airlines. And even though we're not really seeing yet a lot of traveling, and may not for a while, if anything picked up, I would go to this airline right here. And the reason is because this is not in a was never in a bullish phase. When the 200, which is in green, is above the 50, then this becomes either a bearish phase if it's under both, a distribution phase if it's under 1, and an accumulation phase if it's above. So right now we're back to a distribution phase in this, and yet it's holding this 50-day moving average right here. And it popped a little bit on Thursday. So that gives you an interesting place to look. If it can hold 35.78, the 50, and let's say get back through 37.50, $2 from here, which would also be above the high on Thursday, then that might be, with a very heavy short float, I would think in these airlines, interesting, especially, and I'm actually going to asterisk this one because I'm looking at it, and when I talk to you, it gives myself some trading ideas. If you look at the real motion down here, it's still above both the 50 and the 200, so the momentum is better than the price. That's kind of what we want to see. Let's also take a look at United Airlines. That is actually in worse shape, which is why I like to go to Southwest better. Not necessarily fly it, but definitely look at it for a chart. And you could see here that we're actually below. We're in a bearish phase in this, but look at the divergence here over both moving averages. So again, would I get too excited about this? No. This I would really want to see have a couple of closes back over this 50-day moving average before I got too excited about it. But you could see the weakness in the airlines right here. And then I thought it would also be fun to show you the cruise lines, which actually are booking again. But we're certainly not seeing any kind of optimism here in the chart. Right now, this too is in a strong bearish phase. Look at your 200s all the way up here. But when something gets beat up this badly, I start to get a little bit interested. But you can see right now that this is showing also a divergence. This is well above the 50. It's under the 200, but then again, look where the 200 is in the 50s right here. So it's holding the 50. So this might be also interesting again. Why even second guess if we can get 2 closes back over the 50 and head back into what would be, and I made a mistake before, I called it a distribution phase. It would actually be a recuperation phase if it gets back over the 50, which is what happens after something's been bearish for a long time. Now, one last stock I wanted to show you when I talked about the marine freight that I could find is industrial marine transportation and Scorpio tankers. And the reason why I like to look at this is because it's traded in the New York Stock Exchange. And this did sort of the classic situation that I was telling you about, which is it made a new 60-day low and it's not closed too badly. So actually, if we take a look at this stock, I'm going to actually give you the exact numbers on this right now. And we take a look at what it has to close above on Friday, it would have to close above 1095. Now, let's take a look down here. Obviously, we're below the 50. We're well below it here, but not too badly and above the Bollinger Band. So this tells me that maybe it would be worth taking a shot if this can get over 1095. You have a pretty good stop to under 1022 with a little fudge if it actually winds up setting up. And also, you probably want to see this not only close above 1095, but improve in terms of if anybody watches the pivots looking at resistance at R1. That would not be bad if you really wanted to be sort of a counter trend type trader. Okay, with the little bit of time we have left, let's just go through those three vaccine stocks, mRNA, Moderna, which looked like it was going to take out the 50 when I showed it to you last week. Instead, it sold off from the 50. You see how nice it is to just do something simple like wait for a phase change? Hasn't happened. It's also well below the moving averages here. So it's actually showing a very negative sign on in terms of the real motion. So I wouldn't touch it now. But I want you to just keep an eye on it. For all the talk about the vaccines, Pfizer coming out with something, and Moderna. Pfizer looks a lot more interesting to me because actually it's sitting right on the 200-day moving average. And every time, except for this time, it tried to break it, it closed above it, including right here on Thursday. But again, we're sitting on the 200 on momentum. So we want to see this clear a little bit more on price. So again, actionable trading recommendation. I would be a buyer over 36.50. And then I would possibly put my stop in, let's say, under like 35.25 underneath these lows right here, which is not a bad risk to see if this can move back up, especially since this has been hot in the news lately. And then one last stock to show you that we talked about was, actually we didn't talk about it, but it came up on the news on Thursday, and that's Johnson & Johnson, also exploring a vaccine, also sitting on the 50. The 200, but look at the momentum here. It's crappy compared to what we just saw in Moderna. So I wouldn't be as interested in this. It wouldn't stop me because it's holding the 200, but I'd probably want to at least see some kind of show of strength here, maybe at least a close over today's high, even though it's not a new 60-plus day low. When I say today, I mean Thursday. Probably even better if we can get a move back up, let's say, over 146. And then you can risk to like under 143. That wouldn't be too bad because, these are not bad probing because you get one good piece of news on a vaccine and these things can fly. That's why I'm showing you these again. So just to sum up, watch the macro. We're still weak. Watch the transportation though. See if that takes some better leadership. It's got to clear 200 in the IYT. Watch some of those stocks I just showed you, particularly looking at FedEx and UPS and also the airlines. If anything turns around, stimulus money comes or anything like that, or more talk of a vaccine, it's going to help everything because people might feel a little bit better about flying. And that's really what we've got right now. We're still in a very mixed situation. I would definitely keep a little bit of a low profile here. And again, even with the metals right now, you got to keep your eye on the dollar. That's going to be key to what happens here as well. Okay, so that's it for me this week. Hope you enjoyed. Ask me any questions, comment on YouTube. I'll be happy to answer, and I'll see you all next week. Thanks so much. Bye for now.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.